worst time to prepare for an audit is after you've been asked for the first report. Audit readiness isn't just for big corporations. For nonprofits, it's essential. Whether it's a GAAP or grant audit, donor reporting, compliance with funder requirements, or keeping your board confident, being audit ready means your financials are transparent, documented, and defensible every single day. What are the most common audit triggers for nonprofits? States usually require a GAAP audit after a nonprofit reaches a certain revenue threshold, or a new or expanded government grant may cause an audit. And thirdly, a major donor or foundation funding may require an audit. So what usually catches nonprofit finance teams off guard? One, missing documentation for pledges and grants. We often see silos at nonprofits where the donor relations team is using fundraising software as their CRM to track grantors and donors, but then the proper documentation for a signed grant or pledge doesn't make it to the accounting team. So the documents don't get attached to the entries in the accounting system. Then there are back and forth email chains at audit time to try to collect all the necessary documentation. This causes your audit to be delayed, and then your auditors hit you with extra fees because of the delays. A second item that catches finance teams off guard is inconsistent revenue recognition, especially for restricted and unrestricted funds. This can be a biggie and can cause an adverse audit opinion if not done properly. Tracking the time-restricted, purpose-restricted, and permanently restricted net assets needs to be done each period during the year and not just to prep for the audit at the end of the year. Another reason to do this throughout the whole year is to satisfy debt covenants. If your nonprofit has a line of credit, for example, with a bank, the bank may require that you maintain a certain level of unrestricted net assets. And each quarter, you need to report this to the bank. But if you haven't updated your restricted net assets for the quarter, you may be violating your debt covenants with the bank, and they could pull your line of credit. And then boom, all of a sudden, you need to pay back that full $1 million outstanding line of credit. A third way nonprofit finance teams are caught off guard: a messy chart of accounts with way too many accounts and programs and functional expense buckets. I've seen it time and again. When planning the setup of their new accounting system, it can be sexy to set up the perfect matrix of accounts and programs and functional expenses. You think, with this perfect setup, all I have to do is run one spectacular report with a push of a button, and I'll have everything I need for the audit. Then you click that button, and you see the horror. Almost all the transactions are sitting in a generic unallocated bucket because your setup was too complex. Nobody ever had all the information to code the transactions properly, so they were kept as unallocated with the good intentions to come back later and clean it up. Now you're stuck explaining to your finance committee why the draft audited financials will be late and why they need to plan to meet over the weekend to review them. 3 things you can start right now to be audit ready. 1, review all of your material revenue entries to ensure you have the proper documentation attached and evaluated their impact on restricted net assets. 2, have the discipline to review the financials every month and have a comprehensive monthly close checklist. And 3, simplify your matrix of accounts and your programs and your functional expense accounts and have clear SOPs on how transactions should be coded during the month. Look, an audit shouldn't be a fire drill. It should just be another Tuesday. If your controller's scrambling every time someone asks for support, you're not audit ready. Think you may flunk your upcoming audit? Get audit ready with Expand CFO. Click the link in the description to schedule a time to meet with us.